Hello, you're welcome. How are you? Wherever you're tuned in, you're welcome. I'm called Dr. Frederick. I'm a software engineer. And today I have a host with me. He's a lawyer. And we're going to talk about the regulation in the crypto space and how it is standing. And my guest is a special one. I'll let him speak for himself. But his name is called Barry Gisha. So you're welcome. Welcome, Barry.
Thank you,
my
Tim.
show. Yeah.
Thank you, Tim. My pleasure to be here.
Yeah. So to start off, we are talking more about how the regulations, just overall, cutting across Uganda and internationally, how the crypto space is regulated and how the regulation standing is. So before further ado, let me ask. Mention is Barry, but who is Barry? Tell us more about yourself before we jump into it.
Okay. Thank you, Tim. Like you said, my name is Barry Nangisha. I'm a lawyer by profession. I'm focusing my legal practice in blockchain space. I'm a co-founder of Skill Haven Africa, which is a blockchain and cryptocurrency centric startup in Uganda. I'm also a member of the Blockchain Association of Uganda. Glad to be here for this discussion.
Thank you. I'm very much excited to this discussion and see what you can share. Blockchain carves out itself in the markets right now. There's a forex market, commodities, indexes. Now there's a crypto space, crypto market actually, and people are trading it. Maybe to start it on a lighter note, on a premise of are cryptocurrencies considered a legal tender? And before diving onto that, maybe what could be a legal tender? What is a legal tender?
All right. A legal tender is basically what we know as money that is legally accepted in a country, that is recognized by law and by the courts of law in that country. So far, the measure is money issued by the state, by the government. That is what is confirmed to be legal tender. So right now here in Uganda, the Ugandan shillings is the legal tender because it is issued by the state, and the courts of law also allow it and permit it to be satisfactory payment for any outstanding payment or debt. So in short, legal tender is money that is legally accepted to be used for any payments in a country. Cryptocurrencies do not assume the status of legal tender, at least in most of the countries. It's only so far, I think, El Salvador and Central African Republic that have publicly made that declaration that Bitcoin has the status of legal tender in their countries. So most of other countries have not granted that right or status to any cryptocurrency as their legal tender.
Okay. But now people are selling these cryptocurrencies on exchanges. What is the stand of regulation on the sale of cryptocurrencies, as in exchanges, such as Binance, Pinusu, our local cryptocurrency?
All right. In most countries, there's some countries which have decided to grant license rights to some exchanges. So they grant them the rights depending on what kind of commodities or what kind of tokens they are selling out on their platform. In Uganda, basically, we are still operating in a legal vacuum. We don't have a law that outrightly bans the sale and trading of cryptocurrencies, but we also don't have one that expressly permits doing the same. So in law, where the law does not prohibit, it is presumed to permit. That is the legal principle. So there is nothing that deters one from partaking in the crypto market, but there is also nothing that expressly permits them to do so. However, in other jurisdictions like the US or the UK and other countries, there are some exchanges that are regulated by the Securities and Commission Exchange, for example, in the United States, because they think that cryptocurrencies fulfill all the requirements of being considered a security. So they grant them the right to trade securities. In other countries where they don't expressly think so, they are considered commodities or any other digital assets. So they trade depending on what the country says and how they think they fit in that kind of legal framework in that country. Right now, what we have is an upcoming law, which is going to be the very first comprehensive legal framework globally that was approved by the European Union, the MiCA. The MiCA is the first comprehensive law that will be regulating digital assets across Europe. So it's going to set pace for how we grant rights to exchanges, who is permitted to issue tokens, what's the criteria you follow, how do people buy from the exchange, and what rights do they have, what don't they have. So it's going to be the very first comprehensive guiding legal framework on how to go about exchanges and their regulations.
Okay, as you're speaking, you mentioned a few things like securities, commodities. Could you expound more? What are securities, commodities?
Okay, in legal terms, the first comprehensive definition of what a security is was established around 1946 in the United States of America Supreme Court in the case between SEC, which is Securities and Exchanges Commission, versus Howell. It is a landmark case in the United States of America because it set precedent on what a security is and what criteria must be followed to determine what amounts to a security and what doesn't. So the court said that where any person invests their money in a collective investment and they expect to earn a profit from it, depending solely on the actions of a third party, then that investment is considered a security. They also broke it down to say that if that what they're investing in has been issued by an individual who is known, then it is also available for any other person elsewhere to invest in it. And then the profits are determined by the person who is controlling it, then it fulfills the qualification or the criteria to be considered a security. What would distinguish a security from a commodity? And more about a security is that usually they grant someone a certain right. For example, stocks are securities. If, for example, you buy a stock, you earn a certain right in the company. You earn profit from the company depending on how the promoters and directors of that company do the work and exercise their duties. You earn a profit. Then you also have a right to vote depending on how many shares you hold and what the governance of that company is. So the security grants you a certain right in the company or in that kind of investment you're making. That is what is considered. In comparison, the commodity is everything that a security is not. A commodity, usually people use the examples like oil or coal or gold or silver. Those are commodities. They are not issued by someone in particular. You don't expect to earn a profit because depending on the actions of a certain third party. So those things that are not solely reliable on an individual's effort to release or make profit are commodities. So everything else that is not dependent on a third party and is available for investment is what you'd consider commodity. That is the basic difference between the two.
Okay. We may go back a little bit. I think you mentioned it, but let me paraphrase it a little bit as a question that piqued my mind. Why are cryptocurrency exchanges allowed to trade cryptos? Could you have more clarification, like why they're allowed?
Okay. Right now there is demand for crypto. Globally, there is demand for crypto. So it becomes easier when people use a known platform to access the commodity or the good or the product they're demanding for. So exchanges have decided to fill up that gap to be the platforms where people go to purchase different crypto tokens. So why they are allowed to do so is one, because some are licensed to carry on the business. Some that are not licensed are not prohibited from doing the same, but they are working in certain conditions. For example, the concerns, even in countries that don't have specific regulations or guidelines for cryptocurrencies, their concerns about anti-money laundering. So you find that at least they have to conform to the policies and regulations that relate to anti-money laundering. So as long as they do not go beyond the scope of anti-money laundering requirements and criteria, then they are permitted to go ahead with their transactions and carry out their sale. But most of them are neither prohibited nor expressly permitted. There are some exchanges that have branded themselves as very compliant. Whichever country they go to, they seek to have certification and license from that country. So they're trying to set the pace, be considered very legal, so that their potential customers and end users get to understand that we're dealing with someone legitimate. We don't have risk of this person disappearing or anything happening to our investment. So definitely, if I were to give a recommendation, I would say you get an exchange that is compliant and has all the licensing and conforms to the law of the land in which they are operating.
Okay. There are some cryptocurrencies that are having court cases right now. Does exchanges do some background checking, and what would be the ramifications of listing cryptocurrencies that have issues, maybe court cases? Case in point, it could be like XRP.
Yeah.
They're having a court case with the Securities Exchange Commission in the States,
Yeah.
and they have listed this currency in different crypto exchanges. What ramification does it have for the exchange or for the people who are owning these tokens, the XRP tokens, and what news would it have for the overall crypto space?
Right now, what world over every regulator is grappling with is figuring out how to regulate this space. So even the Securities Commission and Securities and Exchange Commission in the United States, which is going after different crypto tokens and different exchanges in court and in settlement or other different avenues, they are not certain about what exactly they are doing, because they are trying to do regulation by enforcement. In their understanding, they find some crypto tokens to be befitting the criteria of securities, because they say, if, for example, XRP has been issued, XRP is issued by known people. People invest in XRP depending, and they expect profit. The profit depends on how the promoters of that token are doing, how they're improving the space, or what is the utility. Then it is a common investment. Every other person has access to it. So SEC says, depending on everything you're doing, one, there is an investment contract, which is a common investment, and the third party's actions determine the end user's profits and losses. So you are, by action and operations, operating or running a security. Then that means you have to register with us. If you don't register with them, then that's how you end up in courts of law. But I think the approach of, that is my opinion, the approach of rushing to the courts of law to determine these issues are great, because they're going to set precedents. The courts will be able to determine what a security really is. Maybe we're going to have an updated definition different from the 1946 definition of the Supreme Court. We might have an updated and more progressive approach to what a security really is and what a crypto token really is. Are they still the same, or are they different things? Can we distinguish them? Because even right now, the SEC is having conflicts with the commodities regulatory body in the United States. They say, no, you look, we are the ones supposed to regulate cryptocurrency. SEC says, no, hold a minute. We are the ones actually supposed to regulate cryptocurrency. So where there is that kind of conflict between the regulators themselves, the players in the market also are spoiled for choice. They don't know to whose regulations and whose regulatory measures do we conform. So I think that is going to be resolved by the courts of law, and we shall have a progressive definition or determination from all the suits coming up Yeah.
Yeah, okay, all right. In some interview that I watched you saying something how the laws comes they come later on in the innovation in the spectrum where innovations precedes the law.
Yeah, yeah.
So in this particular case, are we already late for the innovation, or it's a bit of a mix? What's your say on that?
Yes, it's the truth. World over, innovation precedes the law, meaning innovation happens, then the law plays catch up with it. We have seen this very many times. With each new development coming up, the law is the last thing to catch up. So, in the meantime, while the law hasn't been enacted or put up for regulation of a specific innovation or advancement in technology, what is the best thing to do? The best thing to do is not to suffocate the technology coming up. The best thing to do is give it room to exercise, give it room to play out, and understand how it operates. Because right now, what some people think has delayed regulation in this space is we have not seen the full potential of blockchain. We haven't seen the full potential of cryptocurrencies. So you might put a limitation while trying to regulate. You suffocate greater innovation of the same technological space that you're trying to regulate in good faith because you don't understand what is likely to happen in 10 years from now. So what the regulators are trying to understand now is how do they balance advancement of this technology and regulating and creating consumer protection in the same space so that they don't suffocate the advancement of the same technology while purporting to protect the consumers of the same technology. So, but it's not surprising because everywhere, we've seen it in the UK, in the US, which are considered the most developed countries, they also haven't figured out regulation of this crypto and blockchain space, which is understandable really. Only that some countries have taken a more stringent approach, which is before we regulate and before we give you guidelines to follow, do not operate. I think that is not the best thing to do. To use very formal language, that is not the best thing to do while trying to regulate technology, because technology by its nature it's supposed to make human life easy. It's supposed to make how we interact with the world simplified. So if you feel threatened by each advancement in technology, you are suffocating how humans are going to relate with each other. And one thing is for certain, where you try to get into the way of any advancement over technology, humans will find a way out. So they will do something behind your backs where you don't even have supervisory duties or roles to play where you haven't regulated. So I think the best thing to do in any space where there is any advancement is to give room for technology to exercise, let it run and operate, play a supervisory duty, make sure that there is no illegality or criminal activity cropping up in that space as you prepare to lodge out or release a comprehensive legal framework for it.
Correct. Moving forward, some look at cryptocurrencies as a digital currency. Some may look at it as assets. How does the taxation then apply to them? Like maybe they have it as a digital currency, and some are looking at it as an investment and as an asset.
Okay. So far, some countries have not released particular legislations that govern this space. So they have not decided to get into the mud of trying to determine whether it's a security or a commodity or it's a property or a digital asset. They have said, hold on, as someone else figures that out, we're going to say this is a recognizable investment. So what we're going to do, since it is a recognizable investment, we're going to levy tax. So the tax that is usually charged on cryptocurrencies is capital gains tax. Capital gains tax is a kind of tax that is levied on an investment once it has been liquidated. In traditional finance, if someone invests in stocks or in bonds or any other securities, the moment they have not yet liquidated their investment in stocks, no tax is applicable. When you liquidate your investment in the securities and trying to take out profit, that is when the capital gains tax applies. So India, I think, has one of the highest capital gains tax on cryptocurrencies, which is up to 30% on your gains made from the investment. So the tax applies. That means there has to be a body that controls or that supervises how much money you're making on your crypto asset or investment. So in some instances, you don't really have to determine whether it's a security or not. If you recognize it as an investment, then you have the first beginning point to issue out taxation laws, like what we're seeing happening in some jurisdictions. So the capital gains tax is what applies when you're trying to liquidate or take profit from your investment. That means that some exchanges or trading platforms will have to comply with certain regulations like accounting, which people are investing here, how much are they investing, and how are they taking out their profits. So every time they liquidate, that information has to be available to the regulator so that they know how much tax is to be levied on the profits taken out.
Okay. When I want to create an account with Binance, usually they ask me for a KYC, know your customer, and other cryptocurrencies, same as Binuso. If you go there, there will be a KYC to know who you are. Are there some transmission and anti-money laundering laws on crypto?
Well, the anti-money laundering laws that we have are not very particular as to crypto or what. It is finance. Any financial institution, any institution dealing with finance directly has to be compliant with the anti-money laundering laws. So the beginning point has always been cryptocurrency is being used by criminals. It's being used for terrorism financing or any other related activities. But that should not be used against the reputation or the beauty of the technology that blockchain and cryptocurrencies are. Recently, someone was saying, this was at the blockchain law social event in the US. Someone was saying that, for example, criminals use phones. They use vehicles to get out from the crime scene. You can't say, well, a Ferrari is bad because a criminal used it to get out from the crime scene. You can't say iPhone is bad because a criminal used it to track someone or make a phone call that ended up in the illegal activity. So same thing with cryptocurrency. If a criminal decided to use it to transfer the money, we should not blame the technology. We blame the criminal and then look at how do we safeguard the technology from being exploited by the same people. So the anti-money laundering laws are there. Every exchange has a policy on anti-money laundering that is compliant with where they are operating from, because they don't want to be smeared as an entity that conforms with illegal activities. They don't want to be related to that. So, for example, Binance has a very strong anti-money laundering regulation and policy. That is why some accounts have been frozen, they are struck down, and people are complaining. That is because they have certain measures they have to follow to ensure compliance, to ensure that they are working within a regulatory framework and they are not associated to any illegal activities. So anti-money laundering laws are there, but I don't think they are sufficient enough to guard against money laundering in the crypto technology. They may have to be revised to ensure that we have particular compliance measures that are held to the standard of cryptocurrency. So the law will definitely have to change, but like we said, it's always the last thing to catch up. But the moment we understand what are the loopholes, what are the technological gaps that we have to fill in, what are the places where the illegal activities are likely to crop up, then we understand how to regulate the space. Because right now, if you try to rush in to regulate and say we're going to impose these laws, you're likely going to cause a stir, because you might say we're going to have a minimum transactional volume per day of this much on crypto exchange, just because you're scared about terrorism financing or any other illegal activities. And then you will be infringing on the rights of other people who are using the technology for legitimate purposes. So the best thing is always to give the space enough room to operate, understand what the issues are likely to be. But also, as you do that, make sure that they are conforming to the basic legal framework, especially on anti-money laundering, so that you don't suffocate them, but they also don't use it to exploit the loopholes in the space. So that also means that for every delayed reaction to regulate the crypto space, you are at risk, because someone might take advantage of the fact that there is no known regulation in this country that is going to track down my transaction, because their anti-money laundering laws are not very particular on cryptocurrency. They know that a particular exchange does not have specific compliancy issues with the law, so I can do anything I want through this technology. So it is always in the best interest of the state, in my opinion, it's in the best interest of the state that they grant licenses and grant permission to exchanges to perform or to run in their countries, because then they can guard against certain things that they are scared about with the crypto space. That is when you say, for you to operate here, must do this and this. Show us your anti-money laundering compliance policy on your platform. If we approve it, then you can be licensed to run or to operate in our country. Show us how you audit your transactions. Show us how you ensure that people do not have illicit transactions through your platform. What are your cybersecurity measures to ensure that there is safety for the end users on your platform? If you comply with all that, because that is the law, then you can be licensed to operate in our country. But where you don't have anything, not even a regulation, not even a recommendation, not even a policy in place, then you're likely to suffer all the consequences of not regulating the space.
Yeah, correct. Yeah. Oh, we've been talking more on the cryptocurrencies. Blockchain as a whole is the technology that is powering these cryptocurrencies. However, there are some other technologies that blockchain itself is also empowering, like NFTs, metaverse. People are having games where they play to earn, and just like Barry is saying, these spaces, some of them, they're not yet fully regulated. They're like in a way, in a blanket way regulated. But these technologies bringing about ownership. And it takes me to the point that I really am driving towards, that is ownership and licensing. For example, NFTs and metaverses, where one can own a piece of arts, a piece of his own creation, and then later on would sell it on a market. How is the regulation? How sure am I that this person who claims to own this asset is the real true owner? And if he sells it to me later on, may come and say, hey, you maybe hacked into me, you're using a pirated thing. Could you maybe expand more on that as well?
Okay. So what I said about regulation always coming last, how we don't yet know the full potential of the blockchain technology. If in 2000, because the first cryptocurrency that is known and the most popular, which is Bitcoin, was rolled out in 2009. So in 2010 or 11, let's say the fastest country to adopt Bitcoin said, okay, guys, look, we're going to regulate Bitcoin, we're going to regulate blockchain because that is the technology that powers Bitcoin. Let's set up a law. They would most probably wouldn't have foreseen or have envisaged that there is a possibility of NFTs coming up. So that means they would have suffocated innovation in the NFT space, depending on how their regulation would have been crafted. So that's why I'm saying that the challenge with regulating new technology always is, what is likely to happen in the next few 10 years or 15 or 5? What am I likely going to suffocate in my efforts to regulate the space? So you have to make sure that your regulation is accommodative. It also leaves room for development of that same technology. Don't suffocate it and don't make it so restrictive. But also coming back to your question about ownership of things like NFTs and people who own rights and land and property in the metaverse, how do you guarantee that they are the true and legitimate owners and they have legal rights over whatever they own in that space? That brings into context the issue of intellectual property. Intellectual property law has to be at play. If, for example, I'm the creator of a certain NFT project, that means I must have copyright over my project. That means that any person who is going to buy, because NFTs, what makes NFTs what they are is that they are non-fungible, meaning that you cannot exchange them for anything else. Each NFT is very unique in its own right. So they are not interchangeable with anything else. So with each NFT release, that means it must have its own copyright. It must have its own ownership rights attached to it. So intellectual property will have to advance to the level of ensuring that if my property has been purchased in the NFT space or using blockchain, I must have true and entire rights over it, like I would do in the traditional or normal space. So that means that will also depend on how they decide to define some of these things. If they say NFTs are considered property, then intellectual property law might not have to undergo through so much scrutiny because we might have to follow what is happening in traditional regulation. Because some people are releasing their music albums using NFTs. They are releasing their art pieces using NFTs or selling different things using NFTs. So the same intellectual property law would apply, because what intellectual property law seeks to do is to grant the creator, the creatives in the space, the innovators in the creative space, their rights over their property, to grant them full ownership. So that tomorrow someone doesn't come and say, I did this before you, so I think I'm the legitimate owner. So what the blockchain space would actually be doing, because if, for example, the Bored Apes are the most popular NFT projects in the world. So no one can come and say this particular NFT was mine before yours. That is the beauty of blockchain, because blockchain timestamps and records all the data and information relating to who owns anything that has been purchased using that technology. So you shall be looking at, we shall be back before this date. So we shall be looking at the blockchain data and history to say, this is what happens, this is Tim, he bought it on this day, he's the legitimate owner. So even when you're trying to buy from someone else, you must be able to prove and authenticate their ownership of that project and on the blockchain and the NFT space. Yeah.
Correct, that's right. Bringing it down here in Uganda, how is Uganda's standing in regards to regulations of cryptocurrencies and this new technology?
Okay. So Uganda we haven't had so much news about the crypto space, especially from the regulators' end. Only that there is a communication that was made by Bank of Uganda not so long ago, which was misinterpreted by most people. It was a misconception that it amounted to the banning of cryptocurrencies in the country, which was unfortunate because it was misconstrued by the mainstream media, and some people have been reaching out and blowing up people's phones saying, your thing that you're specializing in is now illegal in your country, what are you going to do? So what Bank of Uganda was saying that is whoever is dealing in the crypto space must understand one thing, that one, it's not legal tender, so it is not money authorized by the state or by the regulators or by the courts of laws to be money acceptable for any payment. Two, that we don't have the law regulating that space as yet, so do whatever you're doing at your own risk. Three, they also issued a directive to all the national payment licensing holders to scale down their operations in the crypto space. So what we were having initially before that statement came up was that we were having these different fintechs and telecommunication companies that have payment systems, bridging payments from traditional financial systems and institutions to exchanges. So they were easing payments using mobile money or any other gateways like Flutterwave and the likes to ensure that money is deposited on different crypto exchanges and ease transactions. So the Bank of Uganda said, whichever license you hold does not grant you the rights to do that. So please scale down until you are authorized to do so. That is what Bank of Uganda said. Bank of Uganda did not say whatever you're doing is illegal. cryptocurrency is illegal. They did not say that. So people must understand that Uganda, that whereas we don't have comprehensive regulation that governs the cryptocurrency space or the blockchain space, cryptocurrency is not illegal because we're having very interesting and brilliant innovations in the cryptocurrency and blockchain space here in Uganda. So amounting it to illegality would be suffocating very many brilliant ideas that are creating and contributing to the economy of the country. So bottom line, in Uganda, cryptocurrency is not illegal. So everyone should have it at the back of their mind. So someone will ask, why don't you say it is legal? No. So like I said from the beginning point, as long as the law does not expressly prohibit, it is presumed to accept or permit. So if there is no law that says don't take this glass from this table, that means the law says I can take away the glass from this table. So it means that you are free to trade and participate in the cryptocurrency market. However, you should understand that when you're doing it, be cautious because we don't have particular laws that are going to come to rescue in case anything happens. But that does not mean that the space is totally ungovernable and you can do whatever you want. No one is going to come after you, that you can engage in scams or Ponzi schemes and manipulate people and exploit them of their hard-earned money. That is not the case. We have the Blockchain Association of Uganda, which is a body that oversees or that performs supervisory roles over the entire crypto space in Uganda. So the main objective of the Blockchain Association of Uganda is to sanitize the cryptocurrency and blockchain technology space in the country to ensure that we have legitimate players who do not exploit the end users or the potential users of this technology. So this association has made sure that whoever is participating in the crypto market space in Uganda has to be verified and approved. This also is meant to inform whoever is listening and watching in to understand that if any person comes to you and say, we trade in cryptocurrencies or we operate in the blockchain space, ask them if they are registered members of the association. Ask them for the approval. If they do not have it, then send them back to get that kind of approval. In the alternative, call the association. The Blockchain Association has a website where there is a scam alert. So you can utilize that, send in your email or send in your complaint, be a whistleblower, participate or contribute to the sanitizing efforts of this cryptocurrency space, because we're trying to ensure consumer protection as we await for more comprehensive laws. In the absence of laws, we should not have anarchy or chaos. So that is what the members of the Blockchain Association of Uganda envisage to do and are doing right now. So as per Uganda, that is the stand on regulatory framework and operations in crypto space.
On that same note, I want to ask about how the future of regulation stands, maybe beyond Uganda and global. How does it look like?
Okay, the future of regulation is going to be very interesting. We're going to have this space totally legalized and regulated. We shall be looking at more investment coming up because the moment you regulate, that means you create certainty. Any investor who intends to throw in their money in any crypto-related investment, they will have some guarantee of safety and protection from the regulators and the state when it comes to the investment. Also, we shall have improved innovation and maximum utilization of the potential of the technology. But also, I think what is likely to happen with the regulation, and this from what I've seen with the MiCA that was approved by European Union Parliament, we're going to have specific guidelines that safeguard the end user. The end user is going to be the most critical person in the blockchain space. That means that all the laws that are going to be established are going to basically have consumer protection as a central point. Because in the end, they are targeting individuals who believe in this technology and the beauty of it, that can inject in their money or can contribute to its success. So the end user is going to be very central to the regulation whenever any law is being drafted anywhere in the world. I recently was giving an illustration that, for example, think about what would happen if you and I are investing in Bitcoin, and then unfortunately one of us passes on. I know that you have your wealth, at least 50% of your personal wealth in Bitcoin, but you've now passed on. You have your private keys. I have no access to your private keys. I don't know how to go again after any exchange in which you're investing. I don't know how your next of kin or your family can be able to retain or recover your investment. So the law is going to be able to answer those questions. How do I go against a particular exchange to recover my investment, at least for my next of kin or for my family? Even when I'm writing a will, how do I bequeath my Bitcoin to the next generation? Because death is a known fact of life. It happens whether we want it or not. So actually, there is a statistic that over 10 to 15% of all the Bitcoin held in the world is inactive, and some of it definitely is held by people who have unfortunately passed on, and it will never be recovered. So this is an asset. This is an investment. The only reason as to why we invest is to have a better life and have a comfortable living while we are here. But also, once we are gone, our loved ones should not suffer like we did not make anything or make any contribution. So right now, I don't know what will happen to my investment in Bitcoin or any other cryptocurrency that I have decided to invest in if I'm not here anymore. I don't know how my brother or sister or my parents would have to chase any other exchange and ask them to release my funds. I've taken time to look at different policies of different exchanges to see what would happen in the event that person is not here anymore, that person is deceased, what would happen to their investment. They don't have clear cut out policies on the same. They are still vague, ambiguous. And that is because the law does not hold them to a certain standard to have policies that are compliant with the laws or specific regulation. So I should not invest in this space worried about what is going to happen in my family when I'm not here anymore. I should have a certain level of guarantee and certainty that in case of anything, I could be subconscious or unconscious, I could be incapacitated in any way, I could have unfortunately passed on, but I should not have worries of my next generation or my family being stranded or being in a crisis because there is no known framework for them to claim my investment for their benefit. And we have what is known in the traditional finance. If you have your money in the bank, there is a known procedure. Who is your next of kin? Fill this form, do this and this. In case you pass on, this is the person that is supposed to come here and claim the investment. Bring in proof of death, that is the death certificate, or anything that has been approved by the state as confirming that this person is not here anymore. And then we see how we can recover that investment for your benefit as a next of kin. We need something similar to that in the crypto space. I've not seen an exchange. I'm yet to see one that is going to challenge me to ask me about my next of kin. There is none. At least I have about 5 or 6 accounts on different exchanges, but there is none that has asked me to give in the details of my next of kin. So the question is, what is the plan of the next generation or of our loved ones, the potential beneficiaries of our investment? What then happens? So we blame that on the regulation. And I think those are going to be very critical points on which regulation is going to be focusing and solving that kind of issue that we have right now in the space.
That's so much exciting future where your real toys are passed on to your loved ones. And yeah, it's really a nice one. A future to look out for. And I think we're moving towards that. There's a light in the tunnel. As we're toning it down, I'll be asking you 2 questions.
Okay.
One is more on you are a co-founder of Skill Haven, right?
Yes, please.
Yeah, you tell us something on that, and then the next thing is to be your advice or something or counsel on the young and the creatives out there and how they look at the crypto space and the technology at large. So let's start with the first one. Tell us more about Skill Haven and what it's all about and how they can find you?
Okay, Skill Haven, like I said in the introductory remarks, it is a blockchain and cryptocurrency centric startup in Uganda. That does not mean that we are limited to Uganda in our operations. We have operations ranging to different countries. We extend to different countries. We have partnerships with different entities from different crypto spaces and jurisdictions. But our main focus is education. We're trying to ensure that we create an informed citizenry when it comes to blockchain and cryptocurrency. So the only way to do that is to disseminate accurate and correct information. So Skill Haven is establishing itself as a hub of information and a resourceful place someone can find anything to do with blockchain and cryptocurrency. If you're looking out for a place where you could start from, then it has to be Skill Haven, because we're trying to establish ourselves as the educators in the space. The beginning point to realize full potential of this technology is going to be education. Education in Web3. Web3 is the broad terminology under which cryptocurrency and blockchain belong. So that is what Skill Haven is trying to do in this country. And so far we're doing pretty well, because we have a number of people that we have helped understand what this space is, and they are contributing greatly right now as participants in different capacities. So as we do education and we establish ourselves as the center of education and resources in this space, we also look at research. The best way to educate is by making research. The research goes to potential customer research, it goes to market analysis research, it goes to investment environment research. So the research focuses on different things, so that you also get to understand who are you targeting, what do they do, what's their age bracket, what's maybe their income range. If you're to offer any product in the crypto space, whom are you targeting, where are you going to focus your energies? So that is briefly what Skill Haven does. And we're trying to establish ourselves in Africa as the pioneers and the center of education in Web3. The second question was about what kind of advice I would give to any person out there watching in, or young person like myself that probably has been listening and hearing about blockchain and cryptocurrency, and he has been postponing even making any time to Google to find out what it is and what it means. So my advice is not financial advice. My advice is take time and do your research about blockchain. Read up about cryptocurrencies. Understand the two technologies and how they are distinguishable from each other. After doing that, don't rush to make any investment. Take time to understand how cryptocurrencies operate. How does an investment in cryptocurrency happen? Find out about the features of different cryptocurrencies, things like volatility in the markets, things like decentralization, what does it mean? Things like rug pulls, how do you invest in a secure crypto token? So get to understand all that. Now, before still you make an investment, ask yourself, besides this investment, what other impact can I create in the blockchain and cryptocurrency space? So I would urge any person that before they rush to make an investment in cryptocurrency, they should figure out how they can establish themselves as businessmen and women in this space. This is a space, like I've been saying, is a space that it hasn't lived up to half its potential. So it has enormous potential for exploitation here. For example, we shall need innovation in bridging payments in crypto and retailers. We shall need homegrown innovations on how we can pay for different commodities and different services using blockchain technology. So think about what service or what business you're going to create that adds value to this blockchain space. I recently said that when the internet was coming up, there was a group of people that had a long-term vision. They were not just excited about internet and how do I communicate and chit chat and everything. They thought about long-term and decided to create business models based on the internet. Right now, the most and the highly valued companies in the world are internet-based companies. technological companies. So the next big space that is coming after the internet is the blockchain space. Who do we have as the innovators in this blockchain space? So my advice would be take time, understand the space, and understand how you contribute to the blockchain space in commercial terms. Don't rush to make one in the investment. I think there is so much that we stand to benefit from this space other than making a quick investment and waiting on the luck or the hope of price fluctuations and the dip and the bear market and the bull run. So there is so much we stand to benefit as businessmen and women. Thank you.
So much information, priceless information. Guys, I feel so much. I mean, I wish I've been down. I think I'm going to rewatch this thing and listen to the priceless information that
Thank you.
Barry has really shared. This one, it was really amazing. Please take note. The most important thing to do from this is taking action. It's good to listen information, listen to people talk. But if you're not taking action, it will be just entertainment. So the reason why I'm trying to create this content, bringing different people, is to bring out value to my viewers, and so that they can take action, be informed people, and they take action in the right space. And where maybe lastly, I should ask the Barry, the lawyer himself, to if we are really late and he's actively participating in this space, as you've heard him, he's really saying certain technical words, the dip, the bear. I mean, if you are if you're still not in the space of trading, you may not understand some of these things, but you will do some research and get it. But maybe are we late, or at what stage are we in this market? Maybe that would be the very last one. Then we say, okay, we're done with our recording.
Okay, if I get your question right, we are so early in this space. We are very early in the blockchain and cryptocurrency space. This is a space that became popular or became mainstream in 2009. So from 2009 up to date, we are only about 12 years old in this technology, and about 5 years mainstream and globally recognized. So you and I are pioneers in this technological space. So whoever decides to come or join this space, like they should, must understand that they are pioneers here. So they can greatly contribute to its full potential. That means that there is enormous opportunities in this space. If, for example, I've decided to brand myself as a blockchain lawyer, and I say my practice, or legal practice, or my legal advisory services are going to be specialized in the blockchain space, that means that there is an accountant who is going to specialize in blockchain accounting and auditing. That means that there is going to be a content creator who is going to specialize in blockchain and cryptocurrency, and you can look at a team here. So people are picking up different niches in this blockchain space because we are pioneers here. We have to set the pace for people who are going to come after us in 10, 15, 20 years. What do they have to look at? We are grappling with employment issues. We have developers who can transition to Web3 and create amazing projects in the blockchain and cryptocurrency space and earn a comfortable living out of that. So any other profession that you think about, now think about it through blockchain lenses. See how you can make a contribution in the blockchain space or through Web3. Imagine if you established a hospital in the metaverse and you don't have to meet your clients physically. You can only tell by the symptoms or in their avatars or whatever. You see how to model it out and see how you can leverage that kind of space. In engineering, do you have your architectural designs logged up or put up in the metaverse, or can we access your history of architectural designs on a blockchain so that we have proof that you've done this work? Or is it available to be bought as an NFT? So there is so much that we stand to benefit here, and most importantly, we are very early in this space.
Well, okay. All right.